Good morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ, and here we are for our Globex session for Tuesday, the 22nd. And oh my goodness, it is a slow morning. Hey, Chiraj. Hey, Timo. How are you? Oh my goodness. So we put in a new high yesterday, liquidated at the end of the day, just dumped it. This was very penny stock like. Took the market up, distributed, and then just sold it off at the end of the day. It's a slow night here, slow morning. We have and thank you for joining me, folks. I know it's when it's slow like this, there's really not much going on. Right now, what we're doing is we're cleaning up. I think what we're going to be doing today is just cleaning up the inventory from yesterday. So that means choppy, small range, back and forth. All the stuff that we don't like. Hey, Renee, how are you? It's, yeah, pretty slow. So what's going on is we have a double distribution in the overnight. We basically have all of this inventory that's just sort of dripping lower, and we're going back and forth over yesterday's low. So the opportunities for us, if you're looking for any kind of a large liquidation, it's a break of this 63.40 level back down to here. Now the problem with that is in this area here, there are a ton of unfilled buy orders. You guys call them resting orders, whatever you guys want to call them, you know. But they're, in essence, they're orders that are not filled. The reason why those orders exist is because traders who are short, every time we get down there, bid the market up. Okay? And that's a concept, you know, most retail traders, they don't talk about that stuff, but it's how large traders execute orders. They bid the market up, which means they don't use market orders and things like that to buy. They put bids in and wait for the market to come down and hit those bids. And that's, you guys will call them resting orders or things like that. We just call them orders. And that is what creates support. Hey Johnny, how you doing? So that's why we have this weird price action tonight. It's because we have so many sort of unfilled buy orders. Remember, every time this market dips down, if we kind of zoom out a little bit, you'll see this is that. There was some weird news in the market. Oh yeah, that's when he was going to fire the Fed Reserve guy. And we took out that poor low and bounced back. We got a ton of people trapped short, and then we one time framed up. So every time you start one time framing or trend higher, you can always count on bids being down here. And so we've got some front running right here, trying to clean that up. We're already on the 22nd of the month. Next week is month end. Next week, Wednesday and Thursday are month end, believe it or not. So there will be that. We're also into earnings season. When is Tesla earnings? Is it Wednesday or Thursday? It's coming up. So, and we have a news cycle as well. All of that's really kind of meaningless for us as we're trading. We're curious as what's down here. Do we do this? Or do we do this? Or do we just, the worst case scenario is just this sideways motion here. And that seems to be what's going on this morning. Let's go take a more in-depth look. So you can see market profile. All these are market profile charts are just a half-hour chart, and they show the volume at every tick level, right? So if you looked at these last half hours, 1, 2, 3, 4, 5, the last half hour, the last 5 half-hour bars, right, have been between 63, 43, and 39. So there's really not much meat on the bone. How you trade this, say you were a trader and you have a little bit of cash, and what you want to do is you want to start building a little position. So say I'm building a position between, say, 42, 41, and if it breaks yesterday's low, I start getting rid of contracts, right? This is how positions are built. You'll build a little position in here, right? Buy a few contracts, and if it breaks that low, the previous day low, you'll start cutting contracts, right? As long as it stays above here, you can add to your position, right? And your hard out would be here or here, right? That's how you can do this structurally. Now, this is not a trade I recommend for people who are learning how to trade. This is the only trade that's really possible at this time because scalping right now, hey Raj, good morning. Hey Johnny. Scalping right now it just bites. It doesn't work. So the only way to even enter a trade is to build a position, right? But when you build a position, you can't be stubborn. So you have to have benchmarks, right? You have to have areas where you absolutely cut risk. So if it starts breaking yesterday's low, and say I have 4 or 5 contracts, I'll automatically sell a few of them. And if it gets back up over it, you can add. Now you're like, oh, JJ, that costs money. Yes, that is the cost of doing business. And if you cannot afford the cost of doing that kind of business, then that business is not for you, right? This is important trading. It's something that no retail trading room or instructor ever says, but there are certain kinds of business that when you first start trading, you can't do because you don't have the funds to do it, right? It's not like I can just open a store and act like Walmart, right? They have economy of scale, which you don't, right? And they have the ability, right? They have the ability to manage much larger expenses. So say you did go into that trade and you were long 5 contracts, maybe you got a 42 and a quarter average, right? 42, 40, 42 and a quarter. Now, how do you manage that trade? Okay, so now you know where you got to cut risk. Where do you sell? Well, there's a seller here at 43, and I'll show you that on the candle chart in a second, right? So if there's a seller at 43, I'm going to put a sell order at 43 and a half or 43 and a quarter. And that's my lookout offer, okay? Right? You guys aren't familiar with the concept of a lookout bid or a lookout offer. If that offer gets taken, ooh, I know there's buying interest, right? And then you can also put a sell order down here at that J low, right? Or even before that, I'd say, at 41 half, 41 3/4, just in case that gets hit, then you know, oh, there my lookout bid's getting hit. I got to start bailing out in this trade. Does that make sense to you guys? So the lookout bid tells you if there's selling. The lookout offer tells you if there's buying, right? But once again, unless you can afford like to take that trade, then don't do anything, right? Because there are a lot of times in business, and trading is a business, right? When there's just no business for you. Sometimes it's a wholesale business. So wholesalers, what they're doing here is they're catching all of this liquidating supply. Notice the overnight point of control is up here. It has not moved down here yet. So one thing you could do is wait until the point of control moves down, which shows good accumulation. Just like when the point of control moves up, it shows good distribution, right? So there's that option for you, right? The other thing you have to do, right? If you're long 5 contracts here and it takes out the 40s, takes out the 39s, you have to be gone because the next level that it's going to come down to is probably 33, and you don't want to be taking that kind of risk on your business venture, right? Every trade is a business transaction. You have to determine where the risk is on that transaction. If you can't, then don't take the trade. Right? This market, before we're done with this particular market, is going to drive us crazy. Okay? It's not an easy market to trade, right? I sympathize with anyone who's having difficulty because we all have difficulty trading this market. It's not an easy market to trade, and it changes from day to day to day, which is really difficult for traders. Some days it'll be choppy, some days it'll be volatile, right? And then this guy in the down south, he runs his mouth. So always try to think about just practical things, right? Just keep it really practical because what happens is most trading educational places, they don't tell you, okay, they'll say this is a setup, take this moving average, blah, blah, blah. But they don't tell you how do you assess market conditions? Like, how do you know, should I be actually doing business tonight? Or should I go to the gym? You know? You have to be able to assess the conditions of the market. Otherwise, you're going to be trading at all the wrong times. Because the setup might be there, but the business conditions that support your setup, the price action, might not be so great, right? They'll say, oh, I'm going to go sell sunglasses at the beach. That's great. Is it raining? Yes, it's a thunderstorm. You might not sell that many sunglasses, right? There has to be some practicality in business, right? So if you're long 42, I would have a 40, like if I'm long, like say 4 contracts at 42, right? 42 and a quarter, I'd have a 43 and a half sell order out there or a 43 and a quarter. And you're like, well, JJ, that's not a lot of money. I'm like, do you see a lot of money here? Do you see a lot of money in this 3-point range? right? Because I don't, right? Make sense? So you have to adapt your business for the business conditions at the time. And if you don't know what the business conditions are, then don't do anything, right? You could see that there's a seller, right? There's a constant seller here, right? Just at 40. So if you're long in this area here, you put an offer right there. And if it gets taken, then you know that there's enough buyers. That's how real traders trade, right? They put out bids and offers. And if your bids get hit, then you know there's supply. If your offers get taken, then you know there's buyers. Now, if you're just starting out on evaluations and things like that, learning how to scalp, it's not the greatest market for us, right? The only way to do this is to try and build a position. Market's getting tighter, Raj, because less people want to play at this level, right? Trading all-time highs is the worst. See, when wholesalers build positions, they have people to sell and buy to, right? Yeah, exactly, man. Hey, trade maker, how are you? Yeah, this market definitely has multiple personality disorder. We can't even joke about stuff like that anymore, can we? Anyway, yeah, it's brutal, you know, and things are going to change because next month is month end. I mean, next week is month end. Is it just me, or did we blink and July just went? It seems like July just started, and we're almost at the end of it now. It's just unbelievable how fast this month has gone. Okay. You know, the thing is, it's not that there's a huge amount of selling. It's just that nobody wants to buy this thing, right? Like, really, the only people who are buying down here are the shorts, right? And how do we move this up? Okay. So pretend, folks, that we're all working in a boiler room, right? And the stock sold off. And we have to get the stock back up. What do we do? Hey, John, live from Liverpool. It's Tuesday morning futures. That's good. Beautiful Liverpool. It's a bit cloudy today in Liverpool. I think our heat wave is over. All right. Can we take out the 43s? Another heat wave coming next week? Oh, okay, good, good, good. I'm not ready for summer to be over yet. Ah, we do have a signal above us. Thanks, Raj. See, there's two little signal prints here. That's why we have that seller, right? We've got that little chunk of supply right here. Thanks for reminding me. I didn't put that in. What's a 76 summer? Summer of 1976? Let's see. We can slowly creep out there, right? So you're long. See how the market's hitting right where that bar is? Where I marked where the sellers are? When you look at a chart, instead of looking at patterns and candle stuff, try and get some practical information. I remember 1976. It was the bicentennial in the States. I was actually down there. See how the sellers are here? What you want to do when you're looking at a chart, try and get some awareness from the chart, right? Now, when you first start looking at charts, they don't mean anything. So people try and use technical analysis to figure out the chart, but they don't actually think about the business. Because the chart is showing business transactions, right? The chart is a graphical representation of business transactions. Basically, it's a graphical representation of your time in sales, right? Time in sales are showing you every transaction. So there's 42 and a quarter, somebody bought, somebody sold one contract. There they did two contracts. That's the bid, that's the offer. So you take that and then you graph it so people can see it visually. Yeah, there's MX, there's excess down here. You're right, Raj. But it's from the close, right? So this whole thing would be the M price probe. And the close is there anyway, so that's what I'm using to market, right? So what does the chart tell you? Once again, Raj, you're in TPO. I'm on candles. I think I did too much TPO stuff with you. Try and use the candles to show you what's going on. You can clearly see that sellers initiated on that candle chart here and here and here, right? Where else would they have initiated? Here. The top of these areas are where the sellers initiated, which caused this movement down. So when you get to these areas again, it's highly likely that the sellers are going to sell at these areas again. That's how you can figure charts out without having to learn a billion patterns. At the lows here, you'll see where the sellers kind of stop selling, right? Because if you look at these lows like a glass door, they come to the glass door and they maybe go and fill orders underneath it and then pop back up. But at these levels, they see that buyers are present and they will lift their price to try and get buyers to pay more, right? This way, if you can understand what I'm saying, you can put some practical use to these charts. Otherwise, what you end up doing is you end up wasting so much time trying to learn a trade pattern, but you have no idea why the pattern exists. You have no idea how to trade it. You have no idea what causes it. You have no idea what the business is. So how could you possibly, right? Think about it. How could you possibly make any money in a business where you have no clue how the business works? It's pretty hard, right? You know, it's like I'm going to go sell car parts. You know, you know what an exhaust manifold is? No, right? I'm going to open a restaurant. Do you know how to cook? No, right? I'm waiting. I'm going to see if that Howard POC moves down, right? Our POC is up there at 63.48. Let's see if we can get it down. It's almost going to come down to that previous day low. And that tells me that the people who are buying there are just shorts. Because who else is going to buy a previous day low? Right? Look at that 1724 or 1777. We need another 50 contracts down here. Right? So, what are the practical aspects of tonight? If you're a small trader, you're going to have to wait for better price action, right? Just like a surfer has to wait for better waves, right? Fisherman has to wait for fish, right? You just got to wait. If you're a position trader, then you build yourself a little position. Here, London's opening. There, the point of control moved down, right to where I said it was going to. Now let's see what happens, right? Because if London can't get any lower, it's going to come in and rip up and try and take that stop. So if you are long, make sure you got your sell orders out. Right? Go 43 offered and see if you can get can we get a taste? Not yet. Seller's still there. That means that there is not enough buying to warrant raising prices. So if you're a seller, if Johnny and Raj and Tampa and John and Richard and everyone, there we go. Now we finally see some buyers. Sell into this strength. If you're long in those 42s, put your offers out and make sure you get paid, right? Sell into that strength. 43 and a quarter. Will they take it at 43 and a quarter? Come on, Bessie. There we go. Out one at 43 and a quarter, right? Now, where's my next offer? Well, I'm going to go 43 and 3/4 and see if I can get taken at 3/4. I know that these rat bastards are going to come in here somewhere in this area. They're going to start selling. So I want to make sure if I'm long 42, 42 and a quarter, right? Is that all we get? Right? Have your offers out. Because if we drop back down, guess what? You didn't sell your inventory. Sell your inventory, my friends. Right? If you get 2 points for it, that's fine. If you don't get, sometimes business is slow and you have to sell your stuff for less than what you thought. But that's business. Make sure your orders are in the system because it's FIFO. First in, first out. You want to be in line. Out another one at 43/4. I got one contract with a 42 average left. I'm offered at 43.5. If they don't take it, I'll move that down to 43/4 now. If they don't take it, I will hit the bid and say thank you very much. I'm out. Beautiful, P-Hunter. Right? Now, here's the thing. That trade, right? You make 2 or 3 points, right? 42. 42, John. We were talking about it before you joined, how we're building a position, right? Now, if you still got some contracts, make sure your offers are in, right? You have to take what the market can give you, right? You can't be delusional, right? If you're going to get 1.5 points of profit, that's all you get. If you get 2 points, that's all you get. Because those are the market conditions right now. The larger wholesalers, of course, they can hold more inventory. You are not a large wholesaler. You're a retail trader who's at that point trying to do a wholesale trade. And the trade that we just did this morning is a wholesale trade. And it was the only way to trade this chop. Now, the only reason I did that trade was what we were doing. What were the steps? We saw the low, we saw it came back in, we saw that these levels were above each other, the lows were moving higher, so we took the trade. Was there risk? Of course there was risk in the trade, right? We knew that there was going to be a seller here, so we put our sell orders right out there. As soon as the market corrected inventory, boom, point of control moved down, good accumulation. London Open couldn't take out the K low. Whoop, right back up. There we go. Let's see, can we get a 44.5 print? Oh, we got a print. Right? So where are the next sellers going to be? This is good. This is nice. This is really nice. Right? Sell into this strength. You know, and that's how you trade like a wholesaler. But now I know some of those funded trader accounts and stuff like that, I don't know if they'll allow you to do that. But sometimes, oh, that was nice. Went to 46. Oh. And that, my friends, is an inventory correction. Inventory corrected up. And that's how you traded inventory correction. Hey, Sandy, how are you? I used the TPO chart. Yep, John, you're right. Harder to see on the candles, and that's why I use TPO. Right? Sometimes, just like when you're working on a car, John. Right? Sometimes you need a Phillips screwdriver. Sometimes you need you know, a certain size of socket wrench. You have to have different tools. Inventory correction, Renee, means if inventory is short, we will have a correction upwards. If inventory is long, we'll have a correction downwards. I've never actually used the words demand change. That's interesting. When we, how do I know it's an inventory correction? As opposed to, how do I know it will be an inventory correction? I'm sorry. I just want to get the question right. Because, is it Agnes? Sorry. Inventory corrections are how price moves in the market. That's what causes your price to move around. The reason why price moves in a market is because of inventory. When inventory, when the market gets too long, it sells off and corrects inventory. It's harder to see on a 30-minute candle chart, John. The detail in the TPO chart certainly helped. It made my job a lot easier. You have the right tool for the job. The subject of today's talk, John, was how do you trade this kind of chop? And this is what I do when it's choppy. But you have to pick your spots. You have to understand why you're going long. You're going long because you can see that there's short covering at yesterday's low. That's why you know it's an inventory correction, right? So what does an inventory correction mean? The inventory was here. It went down here and then it corrected back up. That's what moves markets, folks. If anybody tells you any different, it's inventory and order flow that move markets. Absolutely nothing else. So how markets work is you get some inventory. Hang on, stupid thing. You acquire inventory. You go and you sell your inventory. Then when nobody wants to buy it, you put it on sale back to where you bought it. If there's a ton of selling, then you have to mark that inventory down at a deep discount. When that brings in buyers, you go back up. Price stability causes inventory to be wanted again. It's very simple. Nobody ever talks about it because most trading rooms don't have people who are size traders or have moved large institutional size. So unfortunately, you just get taught candle patterns and indicators, but you don't get told what they indicate, or you don't get told what is the business behind the candle pattern, right? So it makes it very difficult to trade because you guys have no clue what you're looking at. Whereas I can tell when I look at a chart, okay, the market liquidated, okay, there's inventory here, right? So if I was going to do the same trade using a candle chart, John, what can be done, it's just not as clear. You build your position here, you put your outs here, and here's your hard stop. And then you sell into the strength. We use the candles to sell, right? So it can be done. It's just very clear when you see, oh, point of control moves down, boom. Ready to go, that means the point of control moved down. Oh, great, now we've got the position. Let's go sell it, right? We've sucked all these people into blowing out their stuff. We take it and we go and sell it right back to them, right? And that's what wholesalers do. If you ever read Education of a Speculator by Victor Niederhofer, the very first chapter is really the only one you have to read. And he says, when you come to me, you give me your money, I give you goods. Then I buy back your goods for less money when you don't want to hold them anymore. At the end of the day, I have all your money and I have all your goods. Right? So that's really all there is to it, right? We sold people goods up here, right? When we took out that low, they all dumped. We bought all their goods back here, right? So here we took their money and we gave them product. Here we take back their product and we give them back less money, right? Then we take it back up here and we sell them product again and take their money, right? You're familiar with how a used car lot works, right? Same deal, right? This is the world's largest car lot. That's all we're doing. That's all it is, right? And inventory is the product. So if this was a, chart of car sales, right? The candles are just showing you how sales are going. That's all. It's nothing really overly complicated. And if we understand how sales work, right? We just work the chart that way, right? Or are they putting it on sale? Or are there a bunch of buyers and can we charge a premium? It's beautiful. Now we got to wait for our next trade. This is where it gets slow again, right? So we had that was one trade, and we had to wait a long time for it, right? Does that work for you, Timo? The car lot? Except this car lot's open 23 hours a day, and it's always, and there's millions of cars coming in and out. So now, what's the most likely scenario now, right? Well, where's our inventory, right? Let me just take you guys and take you along a little. Just get rid of all these lines, right? Look, here's your inventory, right? Your inventory is all here. Sorry. Make it a little easier. There's your inventory, right? That's where it's all priced. Now, are there a ton of buyers? Not really, right? But there is just enough buying to sell that inventory up here, right? We already came down and tested it. I want you to check this out. I think this will be beneficial for you folks. If you can pay attention and follow along, here's your inventory, okay? Right? Note when the market went up and came back down, it came right back to our inventory, our cost basis. Does that make sense? Do you guys see that? This is how I know what I'm talking about because the inventory gets sold, it comes right back to cost basis, they stop selling. Market goes back up. So now what we're going to do is we're going to try and distribute that inventory up here. We don't need to sell it up here in the 47s to make money because the market, the wholesalers are positioned long here, right? They've tested cost basis on this backfill, right? This could be a balance zone. So if you were if you were coming in right now, you could trade this, you could draw your balance zone and then double it. Let's see, what is P Hunter saying? Target 47 and a half. I mean, if you're willing to stay in the trade, I could see it getting up to 47 and a half. But you have to understand that the wholesalers, you've got competition. If you're long, you've got competition, right? Because all of these people here have a lower cost basis than you. So if you're buying 45 to get to 47, you're dealing with people who have paid under 43 that are selling it at 45. Does that make sense? That's why sometimes when you buy a market high, it doesn't go any higher because the people who have the product at a lower cost basis, they don't have to sell it at 47 to make a profit. If you're long 1,000 contracts between 40 and 41, 39 and 41, 39 and 42, and you sell 1,000 contracts between 44 and 45, even 43 and 45, that's a lot of money. You don't need huge moves, right? You just need size. So if you put on some size, right, that's what wholesale is, right? Wholesale is the accumulation and distribution of size inventory, right? So they're happily, if I was long even 500 contracts, but at a 41 average, I'd be happier you know, than a pig in poop selling them at 44, right? That's how wholesale makes money. If you understand that business is slow tonight, what time is it now in New York? 3:30 in the morning, right? It's slow, but there's still profit to be made. You just have to adapt your style of trading to the market conditions. Now, sometimes if you're a retail trader, you can't, right? Sometimes it's hard to build a position because number one, you don't have the money. Number two, you don't have the skill, right? One of the most important things in building a position is being able to cut risk, right? So if I was building that 41 position and it started breaking those levels like I pointed out earlier, I have to sell contracts. Am I taking a loss? Yes, but that is the cost of doing business. You cannot be a trader and incur zero business cost. That's why people who have a complete meltdown when they get stopped out don't understand that they're in a business, right? And you have to be able to bear the expense of doing business. If you can't, you shouldn't trade, right? Because you are going to have business expenses. Now, a shrewd operator, someone who's smart money operators, keep their expenses as low as possible. What does that mean? That means number one, they don't take dumbass trades, right? They don't trade when the market is not conducive to their type of business, right? They don't, you know, use all these bad excuses like FOMO and tilt and all of these bad excuses, which just means that you just have no discipline, right? Right? And all of that stuff and giving back money, you just have to have discipline, right? You have to have discipline in business, right? You cannot not trade and not be disciplined, right? And you can't make excuses for not having discipline, right? Now look, your 47 might be coming here, P Hunter, because guess what? If you hold a market up long enough, it'll attract buyers, right? So there you go. You got a 46 and a quarter print, 46 and a half print coming, hopefully, right? And you might be able to get out of your position, right? Another couple of points. Book them. Yeah, where is VWAP? I don't even have it on here right now. I'm just trying to show you with a clean chart, what you can expect. And managing your expectations is how you do smart business, right? Right? You got to have smart business concepts. There's VWAP. So if we get above VWAP, whoo-hoo, right? What happens if we get above VWAP? Oh, then it's game on, right? It's beautiful because now we can take this cheap stuff and sell it up here, which would be just choice, right? If the order flow supports, which means if the customers come into the store, right? That's beautiful. It's wonderful, right? What is the goal of the market for a wholesaler is to acquire inventory under VWAP and then sell it above VWAP or as close to above VWAP as you can, right? You will sell it for whatever you can get for it, right? That's why I'm not picky and having to hold trades for 20 or 30 points, right? Because I know that the next trade is coming. There's no reason for me, if I can make 3 to 5 points, or not even, if I can make 3 points on 5 E-minis, that's not bad money with very sort of low risk. So if you're making 3, 4 points with 4 to 5 minis, right? You're making a living and you do that trade a couple of times a day. Next thing you know, you're making a decent monthly income, right? Do the math, right? One mini is 50 bucks. 3 points is $150, right? Now multiply that by 4 or 5. You do that trade once a day, and you don't have to hold trades for 20 or 30 points, right? Especially in a market where you don't have the skill to do it, right? It's hard to hold trades for long. Why not make some money and not stress yourself out? And this is what we teach you in our trading room at the Trading Syndicate. We teach you how to make money in a practical way so you don't have to sit in front of the computer for 25 hours and just sit there and lose your mind, get into trades that you can't handle, trade at the wrong time, give money back, right? Take your money, make your money, go enjoy your life, right? Very, very simple, right? Understand a little bit about the business. You don't have to be a market maker to do this. You just have to understand that this is a wholesale business. And sometimes, you know, you can make money. Sometimes you got to wait for the wholesalers to do their thing. Choppy markets are very difficult to trade, right? They're not easy. So we have to find ways of doing it. And I've been working on this, putting positions together, and I've talked about it before. But what happens is when I talk about it, a lot of the people who can't control themselves, who aren't consistent, they'll try and build a position. And when it goes like, if I was long 41 and it started breaking the 40s, I've got to sell. I have to, because if it took out 40 and then it took out 39, next thing you know, we're 5 points lower, and I'm offside 5, 6 points on 5 contracts. That's not smart business. You get it? You have to ask yourself, is it smart business when I take this trade? Where is my risk? What's the business reason why I'm doing this? And where the heck do I get out? Where's the exit? Like when you get on a plane, they show you where the exits are. When you get into a trade, you have to know where the exit is. And you have to be able to ruthlessly exit that trade without hemming and hawing and whinging and whining, right? It's tactically imperative, right? Otherwise, you're just a bank machine for everybody else. Don't do that. Don't be food. There's your 47, right? Be smart about it, folks. Okay? And if you want to learn how to do this in a practical way with no double talk, and you actually learn how the market works, come visit us at thetradingsyndicate.org. Use the coupon code. It's cheap. You can learn in there. And if you want accelerated learning, if you're a little bit more serious and you want to talk about mentorship, I have a one-on-one mentorship program. It's a lifetime mentoring program. You can email me at vwaptrader1 at gmail.com. I'm vwaptrader1 on X. And this is the Trading Syndicate. Thank you so much for being with us. Trade smart out there, okay? And if you have questions, reach out. We're here to help, okay? Thanks, everyone. Have a wonderful morning. We'll see you at 9 a.m. Eastern Time for our next session. Bye for now.